Monday, April 27th, 2026, 4:17 p.m. Eastern. In exactly 9 hours and 43 minutes, the Bank of Japan announces its monetary policy decision. That announcement happens at 2 a.m. Eastern Time Tuesday morning, while every American silver investor is asleep. And what the Bank of Japan does at 2 a.m. Tuesday is going to determine whether you wake up Tuesday morning to silver at $78 to $80 or silver at $73 to $74. Because the decision that Governor Kazuo Ueda makes tonight directly controls the value of the Japanese yen, and the yen's value directly controls the US dollar index, and the dollar index directly controls the COMEX silver price through a mathematical correlation that has held for 40 consecutive years without breaking. If you do not understand what the BOJ is deciding tonight, why it matters for your silver position, and what specific language in Governor Ueda's press conference at 2:30 a.m. moves silver $3 to $5 in either direction, you're going to wake up Tuesday morning 8 hours behind the move with no ability to position ahead of it. I'm going to give you the complete BOJ decision framework right now, every scenario, every trigger word, every currency flow implication, so that when you go to sleep tonight, you know exactly what you're positioned for and exactly what you're risking. Let me start with the baseline expectation, because this is what 99% of analysts believe is going to happen, and why most of them are going to be wrong about the silver implication. The consensus forecast from every major bank is that the Bank of Japan will hold its policy rate unchanged at 0.75%. Bloomberg consensus, Reuters polling, Goldman Sachs, JP Morgan, all of them say hold. And they are almost certainly correct. The BOJ is going to hold at 0.75%. But here's what every consensus forecast is missing. The hold is not the decision that matters for silver. The language that Governor Ueda uses in the 2:30 a.m. press conference to explain why they are holding and what they are watching for future moves is the decision that matters. Because the yen does not trade on the rate itself. The yen trades on the forward guidance about the next rate move. And forward guidance is entirely contained in the words that Ueda chooses during the press conference, not in the policy statement. Here's the specific BOJ context that makes tonight's decision more important than any BOJ announcement in the last 18 months. Japan's core CPI, which excludes fresh food, came in at 3.2% year over year in March. That is above the Bank of Japan's 2% target. It is also the highest core inflation reading Japan has seen since mid-2023. Normally, 3.2% inflation would force a central bank to raise rates aggressively, but Japan is not a normal economy. Japan has the highest government debt to GDP ratio of any major developed nation at approximately 264%. When your government debt is 264% of GDP, raising interest rates becomes extraordinarily expensive because every basis point increase in rates adds billions of yen to the government's annual debt service cost. The BOJ is trapped between 3.2% inflation that demands tightening and 264% debt to GDP that makes tightening fiscally catastrophic. Now overlay the Iran war onto that trap. Japan imports 90% of its energy. The country has almost no domestic oil or natural gas production. When the Strait of Hormuz is blocked and global oil prices spike to $105 Brent, Japan's import costs explode. The yen weakens because Japan needs to sell yen and buy dollars to pay for oil imports denominated in dollars. A weaker yen makes those oil imports even more expensive, creating a vicious cycle. The BOJ's response to that cycle determines whether the yen strengthens or weakens further overnight. And that yen move determines the dollar's direction. And the dollar's direction determines silver's price at the Tuesday morning New York Open. Here is the decision tree for tonight's 2 a.m. announcement and how each branch affects your silver position. Scenario 1, the BOJ holds at 0.75% as expected, and Governor Ueda uses dovish language in the 2:30 a.m. press conference. Dovish language means he emphasizes downside risks to economic growth, expresses concern about the impact of high energy costs on Japanese consumers and businesses, and signals that the next rate move is more likely to be a cut than a hike. If Ueda sounds dovish, the yen sells off immediately because currency traders interpret dovish central bank language as a signal that the currency will weaken over time as rates fall or stay lower for longer. A weaker yen strengthens the dollar index rises, and COMEX silver, which trades inversely to the dollar with a correlation coefficient of approximately negative 0.75, falls. If the BOJ is dovish tonight, silver opens Tuesday morning at $73 to $74, down $2 to $3 from Monday's close, near $76. Scenario 2, the BOJ holds at 0.75%, and Governor Ueda uses hawkish language in the press conference. Hawkish language means he emphasizes that inflation at 3.2% is unacceptably high. states that the BOJ is prepared to raise rates further if inflation does not moderate, and signals that the next rate move is more likely to be a hike than a cut or hold. If Ueda sounds hawkish, the yen rallies immediately. Currency traders buy yen on the expectation that Japanese interest rates will rise, making yen-denominated assets more attractive. A stronger yen weakens the dollar index falls. And silver, trading inversely to the dollar, rises. If the BOJ is hawkish tonight, silver opens Tuesday morning at $78 to $80, up $2 to $4 from Monday's close. Scenario 3. The BOJ surprises with a 10 basis point rate hike to 0.85%. This is the low probability scenario, maybe 5% to 10% chance, but it is not zero. If inflation stays at 3.2% and energy costs remain elevated, the BOJ could decide that waiting longer to tighten only makes the inflation problem worse. A surprise hike sends the yen sharply higher as carry trades unwind. Hedge funds and institutional investors who have been borrowing yen at low rates to invest in higher-yielding dollar assets suddenly face losses as the yen strengthens. They close those positions by selling dollars and buying yen, amplifying the yen's rally. A sharp yen rally crashes the dollar, and a crashing dollar sends silver up $5 to $8 in the overnight session, before U.S. markets even open. If the BOJ hikes tonight, silver could be trading at $81 to $84 by the time you wake up Tuesday morning. Now, let me show you the historical precedent for exactly this kind of overnight BOJ move because it has happened before and the silver reaction was immediate and violent. On July 31st, 2024, the Bank of Japan raised its policy rate from 0.1% to 0.25%, a 15 basis point hike that surprised markets. The yen rallied 3.5% in 48 hours against the dollar. The dollar index fell from 104.5 to 102.8. And silver, which had been trading at $28.50 on July 30th before the BOJ decision, gapped up to $29.85 by August 2nd, a 1.35 gain in 2 trading days driven almost entirely by the yen-dollar move. That historical episode is the template for what happens if the BOJ surprises hawkish tonight. The yen rallies, the dollar falls, silver gaps higher, and retail investors who were not positioned ahead of the 2 a.m. decision wake up to a price that has already moved beyond their entry point. Here's the specific language you need to listen for in Governor Ueda's 2:30 a.m. press conference if you are awake, or if you're reading the transcript first thing Tuesday morning. Dovish trigger phrases include downside risks to growth, monitoring the impact of energy costs on consumption, inflation is expected to moderate, policy will remain accommodative, and premature to discuss further tightening. Any of those phrases signals a dovish BOJ and a weaker yen. Hawkish trigger phrases include inflation remains above target, upside risks to prices, prepared to adjust policy as needed, normalization of monetary policy, and vigilant on inflation expectations. Any of those phrases signals a hawkish BOJ and a stronger yen. The single most important sentence in the entire press conference is Ueda's answer to the question, what is the next likely direction of policy rates? If he says the next move is more likely up than down, the yen rallies and silver rallies. If he says the next move is more likely down or on hold, the yen falls and silver falls. Now let me connect the BOJ decision tonight to the FOMC decision Wednesday, because these 2 central bank events are more linked than most people realize. If the Bank of Japan signals tonight that it is prepared to tighten further to fight 3.2% inflation, it creates political and economic pressure on the Federal Reserve to match that hawkishness Wednesday. Central banks operate in a global framework where policy divergence has currency implications. If the BOJ tightens while the Fed stays dovish, the yen strengthens dramatically against the dollar, making Japanese exports less competitive and putting deflationary pressure on Japan's economy. The BOJ does not want that outcome. So if the BOJ goes hawkish tonight, it is implicitly signaling that it expects the Fed to stay hawkish Wednesday, maintaining the interest rate differential that keeps the yen from appreciating too fast. Markets will interpret a hawkish BOJ tonight as confirmation that Wednesday's FOMC will also be hawkish, which is initially bearish for silver. But here's the counter mechanism. If both the BOJ and the Fed are hawkish in the same week, global growth expectations deteriorate because tighter monetary policy in the world's largest and 3rd largest economies simultaneously slows global economic activity. Slower global growth in a high inflation environment is stagflation, and stagflation is historically the most powerful fundamental driver of silver prices, because it represents the failure of monetary policy to achieve its objectives. Here's the positioning strategy that you need to execute in the next 4 hours before Tokyo markets open at 7 p.m. Eastern tonight. If you own physical silver and have no intention of trading around the BOJ decision, do nothing. Physical silver is a long-term hold, and overnight central bank volatility does not change the structural deficit, the COMEX delivery stress, or the 23 consecutive months of central bank gold accumulation that confirms the institutional rotation toward hard assets. Your physical stack is unaffected by what happens at 2 a.m. Tuesday. But if you hold paper silver through SLV, PSLV, or COMEX futures, you're exposed to the full magnitude of the overnight yen move. If you are long silver and the BOJ goes dovish, you could wake up to a $2 to $3 loss. If you are long silver and the BOJ goes hawkish or surprises with a hike, you wake up to a $3 to $8 gain. The asymmetry of those outcomes creates a decision point. Do you hold through the risk? Do you reduce position size before the announcement? Or do you add to the position betting on a specific outcome? Here's my read of the most likely scenario based on the data available as of Monday afternoon. I believe the BOJ holds at 0.75% as consensus expects. I believe Governor Ueda uses neutral to slightly hawkish language, emphasizing that inflation is above target, but that the BOJ is monitoring economic data before deciding on further moves. That language produces a modest yen rally, maybe 0.5% to 1%, which translates to a modest dollar decline and a modest silver rally of $1 to $2 overnight. Silver opens Tuesday morning at $77 to $78. That is the base case. But the tail risks are significant. If Ueda is more dovish than expected, silver could be at $73 to $74 Tuesday morning. If he is more hawkish, or if the BOJ surprises with a hike, silver could be at $80 to $84. The range of possible Tuesday morning prices is $73 to $84, an $11 spread, driven entirely by words spoken in Japanese at 2:30 a.m. Eastern Time and translated into English within minutes by financial news wires. Now let me show you the Japan-specific economic data that Ueda is looking at as he prepares for tonight's decision, because understanding his data set tells you what he is likely to say. Japan's GDP growth in Q4 2025 was 0.7% annualized, a significant slowdown from earlier quarters. The Tankan survey, which measures business sentiment among Japanese manufacturers, showed deteriorating conditions in March as high energy costs squeezed profit margins. Wage growth in Japan remains weak despite tight labor markets, running at approximately 2.1% year over year, which is below the 3.2% inflation rate. Real wages are negative. Japanese households are losing purchasing power. Consumer spending is contracting. All of that data argues for dovish policy. But inflation at 3.2% and the risk that energy costs push it higher argue for hawkish policy. Ueda is balancing growth concerns against inflation concerns in exactly the same way Jerome Powell is balancing them at the Fed. And that shared challenge is why tonight's BOJ decision is a preview of Wednesday's FOMC decision. Here's the currency market mechanic that most silver investors do not fully understand, but that is critical to interpreting tonight's BOJ decision correctly. The Japanese yen is the third most traded currency in the world after the dollar and the euro. It is also the primary funding currency for the global carry trade. A carry trade is a strategy where investors borrow money in a low interest rate currency, convert it to a high interest rate currency, and invest in that higher yielding market. For decades, the yen has been the preferred funding currency because Japanese interest rates were zero or negative. Investors borrowed yen for free, converted to dollars, and invested in U.S. stocks or bonds earning 3% to 5% returns. That trade works as long as the yen stays weak or stable. But if the yen strengthens, the carry trade loses money because the borrowed yen becomes more expensive to repay in dollar terms. A surprise, hawkish BOJ tonight would trigger a mass unwinding of yen carry trades. Investors would sell dollars and buy yen to repay their loans. That selling pressure on the dollar and buying pressure on the yen amplifies the initial currency move and creates the conditions for a sharp dollar decline and a sharp silver rally. Here is the Iran connection to tonight's BOJ decision that almost nobody is factoring into their analysis. Japan imports 90% of its crude oil. Approximately 12% of Japan's total oil imports historically came from Iran before sanctions. With the Strait of Hormuz blocked and global oil prices at $100 Brent, Japan is paying dramatically more for energy than it was 6 months ago. The yen has weakened approximately 8% against the dollar since the war began on February 28th, making those oil imports even more expensive in yen terms. If the BOJ tightens policy tonight to support the yen and reduce import costs, it is implicitly signaling that it views energy inflation as a persistent problem rather than a temporary shock. That signal has implications for every other central bank watching the BOJ decision, including the Fed. A BOJ tightening tonight tells global markets that central banks are prioritizing inflation over growth. And that priority shift is initially bearish for risk assets, including silver's paper price, but structurally bullish for physical silver as an inflation hedge. Let me now give you the Tuesday morning action plan for each of the three scenarios I outlined earlier. If you wake up Tuesday and silver is at $70 to $74 because the BOJ was dovish, do not panic sell. The FOMC decision is still 36 hours away. A dovish BOJ increases the probability that Wednesday's FOMC is also dovish as central banks coordinate to avoid policy divergence. A dovish FOMC on Wednesday reverses Tuesday's silver decline. The $73 to $74 level becomes a buying opportunity ahead of the Fed decision. If you wake up Tuesday and silver is at $77 to $78 on neutral to slightly hawkish BOJ language, hold your position. That is the base case scenario, and it leaves silver well positioned heading into Wednesday's FOMC. If you wake up Tuesday and silver is at $80 to $84 because the BOJ hiked or was aggressively hawkish, take partial profits. A $6 to $8 overnight gain on a central bank decision is not sustainable through the FOMC Wednesday. Lock in half the gain, hold the other half through the Fed decision. Here is the final piece of the positioning puzzle that ties tonight's BOJ decision to the rest of the week's events. The BOJ decides tonight, the FOMC decides Wednesday. Q1 GDP and core PCE release Thursday. Non-farm payrolls release Friday. And COMEX May first notice day. Delivery data is being published every afternoon this week, starting today, Monday. Every one of those events has the power to move silver $3 to $8, and they are all happening in a 5-day window. The cumulative volatility risk of holding leveraged silver positions through all 5 events is extreme, but the cumulative opportunity of being positioned correctly ahead of all 5 events is equally extreme. The BOJ decision tonight is the first domino. And the direction that domino falls, hawkish or dovish, strong yen or weak yen, higher silver or lower silver, sets the tone for how the market interprets the remaining 4 events, Wednesday through Friday. You have 9 hours before the Bank of Japan announces. You have 11 hours before Governor Ueda's press conference begins. And you have approximately 14 hours before the yen's reaction to that press conference is fully priced into the dollar and therefore into silver. If you are awake at 2:30 a.m. Eastern, you can watch the press conference live and react in real time. If you are asleep, you are waking up to a price that has already moved and a positioning decision that needed to be made 8 hours ago. The smart money is not trying to predict what Ueda says. The smart money is positioned for both scenarios with stops in place to limit downside and profit targets in place to capture upside. The retail money is going to wake up Tuesday morning, check their phone, see silver at a number they were not expecting, and spend the first 2 hours of the trading day trying to figure out what happened. Do not be retail money. Position now, set your stops, set your targets, and understand that the next 5 days are the most consequential consecutive trading days in silver's 2026 history, and the first domino falls tonight at 2 a.m. while you sleep.